But this is one of the reasons why we don't trade every day. We wait for our setup to form and then we pick it. Okay, so I'm just going to do this. Obviously, this is a live account, but for certain reasons, we will not be showing you the other account with which we trade. But actually, this trade is running on our other account. Okay, so just quickly, this is going to be a short one. We'll just show you how we trade and what we do. So to the right of my screen, we have a H4 time frame. So what we normally do, if I switch to the daily time frame, just simple. What I do, or what we do rather, is to mark out what we call market structures. Okay, and in this case, you will notice that there's been a constant bullish run for some time. If you just scroll down there, you see that the market is constantly going up, up, up. So what we want to do is to identify a nice area for an entry. Okay, we don't, because the market is going up. If you notice, up, up, bullish run does not mean we just jump in anywhere. We want to be able to have a sniper entry, basically a pinpoint entry, such that we will minimize losses and maximize profit. So we are looking for those areas to get into the flow of the market. You see what we have on our charts. These are last week low, last week high. These are some tools that helps us to rightly predict the direction of the market. Okay, so what we want to do is, for us, we look at what we call fractal highs, fractal lows. Those are areas that the dealers do business. That's area of business. So for us, we look at an area like this. Like I said, this is going to be a short one. So much later, we may, if you get on board, we'll be able to tell you why this area is very significant. So this area is quite significant. Okay, so usually we mark this area and we wait for price, which has broken this previous high. If you can't see it clearly, let me just zoom in there. You'll notice that price has taken out the previous high here. This was a previous structure level, and price has taken it out and dropped back into this area. Somebody may ask why we don't take it at this area. If we had taken it at this area, it will be marginal, but usually what we look for is a very deep pullback. If we have two or more areas of value or fractal lows, in the case of market going up, this is a fractal low, this is another fractal low. We look for the deepest one because usually the dealers will chase these areas. Okay, it doesn't work all the time, but for now, it just worked spot on, and you could see that zero drawdown, market just fell into the area, and we jumped to our lower time frame. Actually, we trade with two time frames. We look for our the higher time frame gives us our directional bias, and the lower time frame gives us our entry. So if you look at the lower time frame here, what we have is on the M15, this is H4 M15, we have some very nice confluence of settings that we use to determine our entry. One of them is that because we are looking to go up, if you look at the lower time frame, price is coming down, coming down, coming down. To give us a clear confirmation that the direction has changed, we want market to break structure. Okay, so if I just mark here, quite simply, this is structure high. I just want to take it from this level. This is structure high. Okay, this is structure low. Okay, structure low. Okay, so you move forward again. Market broke structure low to the down, pushed back up at the flip zone. Okay, I'm just trying to be fast with this. Pushed back up, we broke it from here, broke this structure low, broke it down. Okay, and pushed back up, and then this is what we call a flip zone. It got to the flip zone, created another high, dropped again, and took out this previous low. Okay, it took out the previous low, where the previous low here at this point. It took it out here. So all the while, if you scroll back, you see that market is creating lower lows and lower highs. Okay, nice and easy. Now, after taking out this low, it gave us a new high. This is a new higher low, lower low. Okay. At this point, what we are looking for is, in order to get into a buy, indicating that the trend is continuing, okay, the lower lows and lower highs has to be broken to the top side. And that happened here. If you see, this is the most recent lower high, most recent lower low, and market broke it here in this area. It broke it. And once that happens, what are we doing? What are we waiting for? We're waiting for price to pull back into our zone. Now, this is where we call the zone. Here, this is now our area of market structure. These are market structure area. All right, these are market structure. This is our low. This is our low, that line there, and this is our high, this line here. Okay, nice and easy. So once it broke it here with this candle, we have this candle appearing or closing above this high here. Okay, now it did all this. This doesn't bother us. What we want to see is that price should retrace back. Okay, this is what we call liquidity grab or stop hunt. Liquidity grab or a stop hunt. Okay, so once it came back into this area, it did a small liquidity grab, but in essence, it actually closed at the nice area of value we have here. Okay, so it pushed down, closed here. We took a position. Okay, and now we're going up. And gentlemen, if you look at this, you will notice that from this particular area, we have done over 1,000 pips. So if you see that, you have 11,593 points. Okay, that's 1,000 plus pips. Okay, we've done 1,000 plus pips, and you can see it running live and direct. Okay, so that's it. We'll call it quits here. You need to get on board and get a grasp of the strategy and reduce your losses, increase your profits. All right, guys, thank you. I hope this video helps a little bit and gives you an insight on how we trade the markets. Thank you. See you guys later.